Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Jon Ferro, along with Lisa Abramowicz and Anne-Marie Hordern. Join us each day for insight from the best in markets, economics and geopolitics. From our global headquarters in New York City, we are live on Bloomberg Television weekday mornings from 6 to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app.
The former Fed Governor Betsy Duke writing the following: it would take something extraordinary to derail a 25 basis point cut in September. The question we've all got, what it would take to make it 50. Betsy joins us now for more. Betsy, wonderful to see you once again. Let's start with Friday and that speech on Friday. Lisa and I have got a similar question, and I think you might have the answer. Was the chairman speaking for the committee on Friday or speaking for himself?
So for the entire speech, he was speaking for the committee, except for the one line when he said, "My confidence has grown that inflation is on a sustainable path." And there he said "my," and that's very unusual for this chairman. And I think what he was doing there was he was expressing his own opinion, but giving the committee room, not front-running the committee, but giving the committee room in September through the SEP to all put out their own estimates of both where the various indicators are going to be and their confidence in their forecasts.
Betsy, how big do you think the range will be in the summary of economic projections come September 18th? How wide is that range going to be?
The range of the projections themselves or the confidence? So the projections themselves, I don't think are going to be a terribly wide range or not more than usual wide range. But what I'm really watching for is the confidence, and particularly the confidence in the inflation forecast. So in the June projections, there were just one or two participants who had more than had actual normal confidence in their projections. All the rest of them said more uncertainty than usual. So that's the confidence piece that I'll be looking for.
Betsy, do you think that it's appropriate for this Federal Reserve to be so disproportionately weighted to cutting rates at a time where we're not seeing true weakness in the labor market?
Well, cutting rates is right now only reducing the amount of tightness. It's not in any way becoming stimulative. And so I think it is appropriate to begin that, but I think they'll go fairly slowly and feel their way along. The one piece that I don't think there's consensus on is what is the level of neutral? What is the neutral level of interest rates, those that are neither stimulative nor restrictive? And I think they'll be feeling their way along to that point.
They also didn't really resolve the other issue, which was the theme of the whole conference, which was how much was monetary policy responsible for bringing down inflation and how much could it be responsible for preventing some sort of downside to the labor market in general. I mean, did we get any answers to some of the bigger questions other than simply a Fed chair who came out and said, yes, we're going to cut rates, we're going to start the process, and we could potentially cut a lot?
So actually, I think he did address that question. The piece that he talked about is the importance of inflation expectations. And what I heard him say was, yes, we were wrong on transitory. Once we realized we were wrong, we acted. And so what I heard from that is, so the Fed might get the individual settings wrong from time to time, but its commitment to its mandate and willingness to act in furtherance of that mandate is most important for the confidence and anchoring inflation expectations. And that piece, I think he declared victory on, not necessarily inflation, but inflation expectations remaining anchored through this cycle of inflation.
Can we deal with inflation, their contribution to actually bringing inflation down from 8 down towards 3? Betsy, what's your impression of things? Because in that speech on Friday, I think we certainly walked away with this idea that the Federal Reserve Chair was acknowledging that a lot of the work came from elsewhere.
Well, this was a supply side driven inflation anyway. So all of the work was on the supply side, which the Fed can't really affect. All the Fed could do was hold demand in check as best it could while supply caught up. And that's true for the labor market as well as the goods market. And I think they did that. But I heard in his speech, he recognized that the reduction in inflation has come entirely from supply, including on the labor side. So when you look at labor, I don't think we have a weak labor market. It's coming into balance, but it's coming into balance because of improvements in participation and increases in immigration, both of which have a limit to how much they can continue to contribute.
Betsy Duke, appreciate it. Thank you. Former Fed Governor Betsy Duke there on the latest, and the reaction there to that speech begs the question, further improvements on inflation from here? Does it require the pain that the Federal Reserve Chairman was talking about 2 years ago? Analyst Pierre Ferragu of New Street Research recently raising its price target on the AI giant to 148, expecting reassuring signals in the earnings results. Their stock is up by about 0.5% this morning after a decent rally on Friday. Pierre Ferragu of New Street joins us now for more. Pierre, just go through sort of base case expectations for you and the team coming on Wednesday.
Yeah, so on Wednesday, investors got shook off a bit by all this noise about the Blackwell family of chips, the next generation chips being delayed. And so that created some kind of like nervousness around the stock. And to us, the reality is that Nvidia is still in the same situation. All buyers are increasing their capex. The supply chain is increasing capacity very, very steadily. So it's very reasonable to expect Nvidia to do better than what they guided 3 months ago, and to guide for the next 3 months in the same vein, like above current expectations. So we think the numbers are going to do fine. And then the second thing is all investors are going to ask on the conference call about the Blackwell delays. What does that mean? Does that mean like growth is going to slow down? And our view here is kind of like counterintuitive. The reality is that when you launch a new chip like Blackwell, it's consuming more of your supply capacity. You need more HBM chips per GPU. You need more like CoWoS packaging capacity per GPU. And so if the new chip is ramping slower, it's actually easing up capacity constraints. And so what we think is that the management is going to explain on Wednesday that while Blackwell might be delayed by 6 to 8 or maybe 12 weeks, Hopper, the previous generation of chips, is actually going to continue to sell very well, because we're still in a world in which many people, many teams want to have as many GPUs ASAP. And so if the next generation is not ready yet, they'll keep buying a lot, as much as they can, of the previous generation.
Pierre, I wanted to ask you a few questions that I don't think will be answered on the call on Wednesday, and it's what's happening further downstream. I had this conversation last week with Bloomberg's Mandeep Singh, and he built things out for us a little bit as well, and I'd love your thoughts too. When you hear from their biggest customers, they are still balled up on investing in this cycle big time, without a doubt. You just get the sense, though, that investors just on around the edges might be losing patience with the story, that they actually want to start to see that investment turn into real bottom line profit growth. Pierre, do you identify any kinds of investor restlessness further downstream with the end use case for AI?
Yeah, I think you're spot on. That's becoming like the key question, the key concern for investors. And that's the right way to look at it. So we're doing our best tracking down, who's doing what with AI. And so far, we think signals are extremely positive. Like you look at what Facebook can produce in terms of numbers of efficiency gains driven by the migration of their recommendation engines on larger systems. When you hear like companies like Walmart telling about how much efficiency gains they gain from AI, I think we're still in a phase where people are getting excited about it, and we are in that kind of like almost like contradictory situation where today, if you don't invest in AI, whether you are like a Walmart using it or like an Amazon or a Google deploying the infrastructure, you're taking big risks because AI is very, very powerful and evolving very, very, very fast. So I think we're fairly safe in terms of the news flow coming in. But there is another reality, which is that we are getting into 2025 into a world that is going to spend like $150 billion on AI chips. And the key question is going to become, again, well, what's next? Can Nvidia's business grow significantly from there again? But we're not going to have any visibility on that for at least, the next 6 to 9 months.
Pierre, do we have any visibility into what the policy backdrop is going to be and how that might affect Nvidia? And I say this as there's a front page story in the Wall Street Journal today talking about how Chinese AI developers are basically working with internet brokers to access Nvidia chips overseas so that they can work on them without violating some of the bans on importing some Nvidia chips into mainland China. I mean, how much do you sort of look at this and see this as something that could potentially be a liability for the company that they talk about going forward?
Yeah, I think it's always an overhang. The government can do whatever they want. The invisible hand is still pushing GPUs towards China, and Chinese users are actually still accessing their GPUs. The government has to work on a thin line. It's very, very challenging. They want to keep the leadership in AI in the US, and for that they don't want to weaken Nvidia or any players, and they want to make sure they don't let China catch up in terms of AI capabilities. I think this balancing act is going to continue. We've seen it over the last 2-3 years, and you have back and forth, and you might have like a tightening of regulation around Nvidia. But now, at the end of the day, it's a smaller moving part. Remember, we are still in a world in which people want way more GPUs and way more chips than what is being produced. So if you have a ruling limiting again access for China to leading GPUs, China will instantly buy, previous generation GPUs, less powerful GPUs, and then the more powerful GPUs, and maybe we had in our models that we're going to China next year, they're going to go to Western clients, and I would call that a second order moving part. It might create a lot of headlines, but I don't think it's enough to disrupt the trajectory as long as we are supply constrained globally.
Pierre, thank you, sir, for your clarity as always. Pierre Ferragu there of New Street Research, looking ahead to numbers from Nvidia Wednesday afternoon this morning, 391. So here's the latest. Vice President Kamala Harris back on the campaign trail this week as her campaign rakes in over $500 million post-DNC. And Donald Trump is maintaining a heavy presence in swing states after a week of counter-programming the convention. Henrietta Treyz of Veda Partners saying the following. Post-Labor Day, she could be in the lead nationally and in critical swing states by enough of a margin to emerge as the favourite to win the election. Harris has ushered in dramatic shifts in the electoral landscape, but is not yet favoured to win the election in our opinion. Henrietta joins us now for more. Henrietta, thanks for being with us. I want to start with those numbers. Harris' campaign and affiliates have raised $540 billion since Biden quit. How does that stack up against campaign Trump, and how are they spending it?
Well, it doesn't compare to the Trump campaign at all. The Trump campaign is down into something in the range of about $63 million for the entire month of July versus over $240 million for the Harris campaign. The two are not equal. If you're looking at the fundraising numbers, the DNC versus the RNC, voter galvanization, the number of volunteers they've gotten in swing states, it's almost double the size, if not more, in the Harris camp. And I think that's something that the Trump campaign is actively worried about right now. You saw it from their internal polling memos this weekend. They're anticipating that not just has Kamala risen 6 points since she started the race just a few weeks ago, but she's going to increase another 2 to 3 points in the next couple of weeks, the next couple of days after the DNC. That's a natural bounce, but one that would supersede Trump, and it probably won't fade. When you think about what Trump is doing on the trail, he's not going to campaign until Thursday. And Friday, he'll be in Pennsylvania. I mean, every single day is critical here, particularly when you're behind like the Trump campaign is now. Just to go a little bit deeper into these numbers, the 540 million, if I said billion, excuse me, 540 million. 1/3, yes, a heck of a lot more money. 1/3 contributed in convention. First-time donors, since the convention, were first-time donors. 2/3 were women. It's the gender split here, Henrietta, that's interesting. That gender split, how firmly entrenched do you think that actually is? The split between women and men in this country and who they're supporting? It is extremely firm, and I don't say that because it's just in the national data. It's in every single swing state as well, often by 10, 11, 12 points. It's particularly noticeable amongst young male voters and every other female demographic, and it's even more pronounced between young male voters and every other age demographic of older male voters. So there is this extreme gender divide that is expanding and becoming more obvious as the race wears on. What the Harris campaign is going to do, to dig into those numbers a little bit further, with their super PACs like Future Forward, is they're going to spend $370 million on ad campaigns between now and November 5th. So get ready to hear a lot about Kamala Harris and her campaign.
How much is this gender divide really hinged to the issue of abortion? And how much can Trump really counter that by coming out with things like what he did over the weekend, talking about how he believes that states should decide for themselves, that there shouldn't be a federal abortion law, but that each state can make their own decisions?
You know, I think that the state decision piece is really problematic because you have these state decisions being made at the ballot in November. In Florida, for example, where I think 2/3 of abortions in the South are conducted, there is a ban now at 6 weeks, and they need to vote on that to maintain it in November. Whether it's Louisiana, Arizona, Nevada, I mean, these issues are on every single ballot. So the last thing you want is a repeat of 2022, which was a real problem for the Republican Party at the Senate and in the House. And that's what they're headed towards in 2024. And the messaging from the Trump campaign with J.D. Vance and Donald Trump trying to come out as, pro-IVF, but really saying some fundamentally problematic things about family planning, to put it nicely, is something that is alienating, I think, a lot of voters. And it's not just women. It's voters across the spectrum. Abortion is the number 3 issue that voters care about after inflation and immigration right now. And immigration and abortion are pretty neck and neck.
In the meantime, your first point, inflation, is something that we've not heard that much about. We heard, of course, the price gouging type of discussion from Kamala Harris, although we've seen some of her people walk it back and talk about how she's not actually going to get it passed and that it actually isn't, an effort to take money away from grocery stores and things of that nature. I'm just wondering, how much are you getting a sense that the criticism of Kamala Harris, that she isn't coming out with real policy, how much is that landing?
I think that it's landing amongst sort of the media groups, but amongst the general electorate, you don't see any of that translating to either her polls, her fundraising. I mean, they made $86 million just last week alone. So the issue is not that she is not getting out in front of journalists and the press. That's an issue for the Trump campaign. But the American voter that's now newly galvanized, Democrats are 83% enthusiastic about this election versus 71% of Republicans. It's not resonating with the average voter. And I think the real problem for Trump is that she doesn't need to get specific on policy. We don't really need to have a robust discussion about where do you think carried interest tax rates should be or capital gains tax rates. What kind of revenue are you trying to bring in to offset the cost of the child tax credit? We don't need any of that. We just need this sort of forward campaign versus do you want to go back to the Trump administration of the 4 years that he was in office? And that's really what the campaign is about. And I don't see that changing over the next 71 days.
Can we talk about policy? Forgive me, but we want to talk about policy, so hopefully we can do that. This news came out from Canada, from our team just moments ago, according to people familiar with the matter. Canada would impose new tariffs on Chinese-made electric vehicles, aluminum and steel, lining up behind what we've heard from the United States already previously. The government plans to announce a 100% levy on electric vehicles, 25% on steel and aluminum. Canada agrees with the United States. This seems to be where the world is when it comes to tariffs and China. How much daylight is there between Trump and Harris on this very key issue for a lot of voters?
Well, I mean, let's be mindful that the Biden administration just a couple weeks ago, or months ago, put in the 100% electric vehicles tariff, the 3 times higher steel and aluminum tariffs, or steel tariffs. There is no question that the Trump administration started with tariffs, and the tariffs under Biden are higher and more exhaustive now than they were under Donald Trump. the USTR, the Department of Commerce, all the investment restrictions, export control restrictions are only growing. I don't see any scenario where any of these tariffs come off once they get put on. Think about what you'd have to see in order to take the tariffs off. You'd have to see China capitulate, China prove and then sustain that they had made changes on forced tech transfer, climate change, human rights, state subsidization. None of that is occurring.
Henrietta, thank you. Henrietta Treyz there, Veda Partners, squeezing in some policy at the end.
This is the Bloomberg Surveillance Podcast, bringing you the best in markets, economics and geopolitics. You can watch the show live on Bloomberg TV weekday mornings from 6 a.m. to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app.